It's one of the few types of monies that you can easily self-custody. It's more portable than other types of monies. And we've seen this throughout emerging markets, right? Basically, in part, money is a technology, right? So, and as technology changes, what we consider money changes. And then you add geopolitical, realities on top of that. And so I wanted to prepare people for what kind of I think we're going through this decade, because people often are used to picking investments, getting out of investments, getting into other investments, but they don't often think about the money itself. And funny enough, people in emerging markets think more about what is money, right? Because they often have to deal with a weak money, and so they want dollars instead, or they want other types of assets. Whereas people in developed countries hardly ever have to think about money. And it's also, there's so many things it touches on, because it goes into the whole Bitcoin versus crypto thing. What is money versus what is some VC tech platform? Assets do you want to hold over the course of the next 10, 15 years as we go through some of these really big macro transitions? And it's kind of starting from first principles of what is money. Developed markets are going through kind of a debt crisis and an inflation crisis they haven't really gone through since the last time money had a big change, right? Since money changed from gold back to fiat. That's the last, big money change that happened. And this environment kind of looks like that whole environment. And that whole thing was a process, right? So you kind of slowly started severing money from gold. It started in the World War I era, and then the aftermath specifically. And then it carried on to the Great Depression. And then of course it carried on to World War II, and the end of that, where you kind of had like a loose peg to gold, but not a direct connection. And then it was really in 1971, of course, it was completely severed. And that whole period we're kind of going through almost like a mirror image today. I think if you didn't have the creation of Bitcoin, one is that gold would be rising a little bit more in prominence. You can also kind of separate it between the sovereign level and the personal level, right? So we just saw, for example, the case I've been making for a while is that sovereign reserves are going to probably begin diversifying more than they have. So if you back up a long time, gold used to be the primary reserve. Then with the whole kind of Eurodollar, petrodollar system, they started putting the US Treasury at the heart of the whole global reserve system. And ever since really 2013, 2014, you've been seeing a little bit of a shift back towards sovereigns, being interested in holding gold as part of their assets, because they kind of could, compare that currency. They could treat it like money, look at it versus other fiat currencies. And it has certain advantages. It has a lower monetary inflation rate. And it has, you can self-custody it in a way that you can't do with liabilities of other entities. And so there's been an uptick in interest in gold. It's also the only, alternative money or outside money, you can call it, that's big enough to absorb, kind of these large sovereign flows. But now with the invention of Bitcoin, it's interesting because it's more accessible to people around the world. Anyone with a smartphone really can for the most part, access it. And it's too small for many large sovereigns at the point, but it's something that over time could become more interesting there. So I think that in the absence of it, we would see maybe kind of a return to gold. But the problem is that gold was somewhat flawed as money. Its shortcomings in terms of portability, audibility, things like that. So there's a reason why we disconnected from gold. And so I think that for lack of better alternatives, there'd be some kind of shift back. Either people would want to preserve their purchasing power, or even sovereigns would want to preserve their purchasing power and sovereignty. But now there's another option. So now there's kind of multiple things to look at. And then you have to compare not only fiat, you have to compare gold, you have to compare Bitcoin. You have to go around and be like, what properties am I looking for in a money? So you want it to be liquid, safe, fungible. So if I buy a house or a specific company as an investment, that is something that is risky, and that is something that is non-liquid and fungible. Like, it's a specific thing. It's hard, it's a hassle for me to transfer it to someone else. That's kind of either a long-term bet or long-term savings, or a specific plan to grow my investment with risk of loss. Whereas with money, it's kind of the opposite. I want like a low risk battery of storing income now so that I can expend it in the future, or share it, or give it away, or whatever I want to do. And so it's got to be liquid. It's got to be something that I can just easily transfer to someone. It's got to be something that is easily divisible, fungible, so that all the units are either identical or nearly identical. And it's got to be something that holds its value that I want to hold it longer term. And then I want to add other things, like you want it to be verifiable, you want it to be portable, and there's multiple ways to break that down. You can kind of look at different monies and like VJ did, for example, you can score them on the different aspects. Gold holds its value pretty well long term, right? Because gold's got a very, very low inflation rate, meaning the amount of gold that exists above ground grows at a very, very slow rate historically. And there's a good reason for that. Whereas other types of commodities can grow very quicker, but it has shortcomings in terms of portability, divisibility, verifying that what you actually own is gold, like the ease of being able to do that. Whereas when you look at something like the dollar, they've made advances for how easily you can send it around, right? Because it's, you can have digital representations of it. And you can, it's very easy to move around. But of course, the downside is that, there's no constraint on how much they can print other than kind of self-imposed restraints that is kind of meant to keep guardrails on the system and stop it from hyperinflating. So there's kind of guardrails on it, but they're self-imposed. And so over time, in practical terms, the rate of new dollar creation is much faster than the rate of new gold creation, right? So when you compare those, you think, okay, those are interesting. We obviously have to pay them for tax purposes. We have to, have some working capital to use them. They're liquid. The government specifically does their best to try to control the volatility at the exchange of devaluation, but they try to, control the volatility of it. And so there's advantages, but they're not a great long-term place to store capital. Coin, it's interesting because the innovation there is that it kind of took the best properties of gold and fiat and mixed them together. So you have the slow monetary inflation rate of gold. In the long run, it's even less because eventually, the inflation rate trends towards zero, right, with Bitcoin. And you have that scarcity, but then you also have the better divisibility, better portability, and better verification across the board, better than most other monies, with a couple weaknesses relative to, it's still relatively untested. It's got 13 years of testing, 13 years of monetization. It's smaller than dollars or gold, so it's less liquid, far more volatile, less widely held, less widely accepted. And so what we can describe it as is an emerging money. And all anyone has to do is kind of look at the properties of it and determine if that's something that they want to hold relative to other monies, if that's something that's valuable to them. And I consider it valuable. So a lot of people will still kind of put it in the speculation camp or the investment camp. And I think it's a reasonable way to interpret it, because you're betting that the way it's behaved for 13 years and the properties it's had for 13 years are going to continue. So you've analyzed the probability of this occurring. You're making some sort of future judgment about this relatively new system. So that makes sense. It's one of the few types of monies that you can easily self-custody. It's more portable than other types of monies. And we've seen this throughout emerging markets, right? It's easy to have, it's hard to move across borders with gold or physical cash. It's hard to transfer bank money around the world. But Bitcoin's something that you can literally self-custody and pretty much move wherever you want. And so I don't think the world fully realized its properties yet and what that means. Basically, I would describe Bitcoin as an emerging money. It's a 13-year-old money, right? So it doesn't have the track record or the size of those other monies. And because it's a smaller market, it has more volatility. It's got basically a bigger range of outcomes for how it could look in 10 years compared to, say, gold, right? So because there's a bigger gap of expectations about what this could become, the volatility is very large. In addition, because it's a smaller market, less liquidity, even though it's got quite a bit of liquidity, it's got less liquidity than say, the dollar market or the gold market. And that's because it's smaller. And so, if a Michael Saylor comes in, they can potentially move the market. Whereas if you have a handful of hedge funds, fast money deciding to sell it because of whatever macro factor they're looking at, that can also move the market. And also because it's known for good returns, there's even though leverage in the space is actually small relative to market cap, there's individual parts of the market that are extremely leveraged, and those easily get liquidated when you have big moves to the upside or downside, which exacerbates volatility. And so it's kind of, people are betting on it in a way they don't bet on, say, gold and things like that, or at least not at this scale. And so that adds to volatility. And one way to think about fiat currencies is they try to optimize for low volatility, but then the sacrifice they make is devaluation. Where if you get deflation, they want to print a lot more. If they start getting inflation, they try their best to throttle that back. And they've had mixed success with that. But basically, you never really have a case where developed market currencies like 50% less useful the next year, right? Whereas that can happen with Bitcoin, even more so. Now, in extreme historical events, even those fiat currencies, they break down. So they go decades and decades and decades without having a major volatility event. And then you get like a 1933 event where it's just, it's practically cut in half. Or you have like emerging markets go through this far more often. But in developed markets, from year to year, the volatility is low. And that, combined with the fact that it's recognized as legal tender, makes it a useful form of kind of like near-term money that you can save it. It's going to be worth roughly the same in 6 weeks, and you kind of go about your day. And that matters for people where their incomes and their expenses are very close, right? So if you're living in a country and you're making $400 a month and your expenses are $400 a month, you can't like risk holding a lot of your assets or whatever assets you might have in something that can go up 50% or go down 50% during that time. You pretty much have to have a stable amount because you have no margin for error. Whereas, of course, if you have a large pool of capital, you have a better ability to withstand volatility. So it's kind of a privilege to be able to accept volatility for harder, better money in the long term. I've not been bearish on stable coins overall. I think that it's obviously an innovation. Like, if anyone who tries sending money internationally, stable coins are an improvement. Yeah, it's just better technology. Obviously, I'd like to see them on Bitcoin, right? And so we've actually seen some announcements at the conference about being able to bring stable coins back to Bitcoin Lightning. So all else being equal, I'd like to see them there. But yeah, one of the few cases in altcoin land that actually has use case, I think, has been the stablecoin market. And Tether's an example, whether it runs on Ethereum or others. It is important for people, especially when there's not a big margin between your expenses and your income, to have a low volatility asset. And so that can mean different things to different people. I mean, currency is generally very low volatility over, say, a 2-month period, except for extreme events. Then you have gold that's more volatile than that. And then Bitcoin's obviously far more volatile than that. And that's actually one of the downsides longer term, is that there's then an inverse correlation between volatility and their ability to hold value long term. And so the cost of that volatility management is ongoing devaluation.